Hey traders, I'm going to show you a simple scalping method developed by Al Brooks that you can do on any time frame really, but in this particular example, I'm going to show you utilizing this on the 5 minute chart for a 5 pip take profit. So what you want to do is this red line signifies 7 a.m. New York time. Probably works just as well during the London Open, I would imagine, but I've not really traded it then. Um, but you want to look before New York Open, and you want to see a strong trending market. And how I identify that is I have the 200 linear weighted moving average and the 21, which this is not part of Al's program, but the 21 EMA is. You look for your setups off of this 21 here. So we have the 21 above the 200, pretty strong trend up, and then 7 o'clock rolls around. And so now we want to start looking for what he calls second entries. So we're going to zoom in a bit here and scroll back. Okay, and here's our 7 a.m. line for New York. And in a long situation, what you're looking for is a new high to be made. So here we have a new high. And now you're looking for a pullback. And then once you have a break of a prior candle's high, that's your first entry. So right here, don't pay attention to the thickest part of the crosshair, but just the horizontal line there. Right there at the high of that black candle, which is this one right here. So let me go back over here. That would be a first entry. Here at the break of this white bullish candle, that would be a second entry. You always want to take these entries off of the 21 EMA. The stronger the rejection, the better usually. We do have a nice engulfing bar here to the bullish side. And then again, you want to, and then you also want, in a perfect world, you want this signal bar right here to be bullish. You don't want to take a second entry off of a bearish bar if you're going long. So again, here, if you had taken this entry right here, you would have had, you would have captured your 5 pips pretty easy. So right here, let's take a look at this one. We have a new high. It's hard to tell or if these are matching highs or not, but if you hover, look down at the bottom right, the high of this bar is 737 and the high of this one is 738. So we did break the high of this bar. So that created a new high right here. So now we're coming down and we're looking, there's a first entry right here. And then there's a second entry. And again, kind of the same setup. We had a strong engulfing bar here as a signal bar. And then if we measure from here, 5 pips without much of an issue. Come back over here and we have another high. Come down, we break the high of this bar here with this candle. So that's your first entry. This is a bullish bar. And then on the very next candle, a strong rejection of the 21. We break the high of this white bullish candle. And then you can clearly see that 5 pips were made pretty quick there. So that's all there is to it. Going short obviously is the same exact scenario, just you reverse the rules there. You're looking for breaks of lows. One thing I didn't mention is every time you have a new high, if you don't get a second entry, if you get a new high before you get a second entry, then the count starts over. So in other words, here we had a new high, right? Well, we immediately had another new high, so we start over. This candle breaking this one is not a first entry. It's a new high. So the counter resets, so to speak, and you go down, you find your first entry here, second entry here. Also, this works on all instruments. I've used it on futures and Forex mainly, but as with any other trading method, you want to give it a shot on whatever it is you might want to trade. This provides multiple setups on multiple instruments every single day during the New York session. So I encourage you to give it a shot, try it out, see how it works for you.